What's up everyone? Thank you so much for tuning in. And if you're new, welcome to my channel. My name is Preeti and I am both a real estate and a mortgage broker for close to 20 years. In the beginning of September, I did a video on how fixed rates and variable rates are calculated. I had advised that if anyone is looking to lock their mortgage, do it for 3 years only, but do it now. Because both the fixed and the variable were almost at par with each other. And it was only a matter of time that the banks would start bumping up their fixed interest rates also. Well, we are now at the end of October, almost. But very soon, Bank of Canada will be announcing another rate hike on the variable side. And we will have to see if it jumps up by 50 basis points or 75. My prediction, it's probably going to be 75 basis points. And where we stand today, the fixed rate mortgages have also shot up over the past few weeks because of the rising bond yields that are stemming from the higher than expected inflation that has pushed the fixed rate mortgages up over the 5% mark. Now, this drastic rise in the cost of fixed borrowing is going to put in even more pressure on the Canadian real estate market, which is kind of already suffering on the biggest, the month-to-month price declines since the index was launched in 1991. Now, RBC says Canada's housing market has never been so unaffordable, and they're right. The others are warning of a real estate crash similar to one that Canada saw in the 80s. The question is, will that really happen? CTV News Canada recently posted an article on what experts from all major banks had to say on the rate hikes. But guys, before I proceed, you know the drill. Make sure to like, share, tap that bell icon, hit the subscription button. It gets me motivated to keep you up to date with everything real estate. Now, as you are all aware, Statistics Canada recently released the current inflation rate, and we are sitting at 6.9%. That's a notch below last month's 7%. But prices are still rising quickly, especially food, which is at 10.3%, and shelter, which is at 6.8%. Together, the two make up 45% of the average household consumption. And with the latest inflation data showing no signs of substantial slowdown, economists are forecasting the Bank of Canada will continue its reign of aggressive rate hikes. And some predict a technical recession during the first half of 2023. In an interview with BNN Bloomberg on Thursday, the chief economist of Scotiabank said there's a limit on how much Canadian economy can withstand. We've got a pretty horrible situation in Europe. Obviously, China is going through a very significant slowdown. And we've got the US, where things are slowing and the Feds indicated that they want to raise interest rates quite a bit more. And that will lead to a recession there. He goes on to say that these economic pressure points make it increasingly more difficult for Canada to withstand recession fears. But he also points out that there is still a fair amount of resilience throughout various sectors of the economy. He went on to say that you can think it's like the economy taking a breather for a few quarters. The Bank of Canada is trying to engineer a cooling of the economy. It's trying to slow inflation, which we all know is true. So this slowdown that's occurring is consistent with what the Bank of Canada is planning, and hopefully helpful from an inflation management perspective as we look at inflation over the next year or the year and a half. Basically, what he was trying to say is that the first quarter of 2023 is not looking good where real estate is concerned. Now, here's what the other economists are saying about the recent inflation data and what is expected from the Bank of Canada as we approach 2023. Bank of Montreal's chief economist, Douglas Potter, he said in a note to all his clients on Wednesday that inflation did not ease as much as anticipated from last month. He added that the weak Canadian dollar and a likely 75 basis point hike from the US Federal Reserve at its next meeting will pave the way for a 75 basis points hike here in Canada. Leslie Preston, a senior economist and managing director at TD Bank, emphasizes the need for a hefty 50 basis points hike next week in the Bank of Canada's overnight rate. I still think they will go 75 basis points though. Derek Holt, the vice president and head of capital market economics at Scotiabank, anticipates the Bank of Canada to increase its policy rate by another 75 basis points next week. Benjamin Tal, the deputy chief economist at CIBC, also predicts a 75% base point increase by the central bank. So with everyone predicting a rate hike of 75 basis points, what's going to happen to the fixed rate and the variable rates? Where we stand today, prime rate is sitting at 5.45%. With the 75% point hike, we are looking at prime jumping up to 6.2%. So people who are insured and who have, let's say, prime minus 0.90, the rate of interest will jump up from 4.55% to 5.30%. So if you have a mortgage of $700,000, you're looking at approximately $300 jump in your monthly payment. But what is happening to the fixed rate? In August, the insured 5-year fix was at 4.44. Today, that same 5-year fix is sitting at 5.14. Guess what's going to happen when Bank of Canada increases their overnight lending rate again? The variable rate will be at par with the fixed, and eventually the fixed rate will go even higher. Now, what about those unsuspecting clients who are coming up for renewal? They fall under the uninsured category. So for them, the variable rate will be around prime minus 0.20, which today is at 5.25, and the 5-year fix is at 5.40. But be prepared, guys. By the end of this year, we are dangerously approaching the 6% mark on all of these interest rates. So if you like the video and would like to see more, please click on the boxes on the screen. Once again, my name is Preeti Rao. My contact information is in the description box below. Make sure to hit like, share, subscribe, the bell icon, so you don't miss any future videos. Thank you so much for watching. And don't forget to call me, because I hold the key that opens a door to your dream home.